All right, Luke, we're talking about billionaires again, and specifically, we're empirically going to look into whether it's always a good idea to follow them blindly into investments or even buy into companies they're backing just because they're backing them. And we have really just a couple of examples. So it is a small sample, but we're going to be looking into Frank Giustra, the Lundin family, of course, Pierre Lassonde, Richard Wark, and Ross Beatty. So we're going to look at what they've done recently and what their performances have been. There's a bunch of notes really that I made that I'd want to go over, or stuff that I want to say is I've been having thoughts these last few months. I don't know what's happening. It's kind of weird. I usually don't. I'm not sure that's healthy. I'll have to talk to my psychiatrist about it. But before we even kick it off, I want to kind of answer that question for myself from a gut feeling perspective, if you will, before we've gone over the data. And for me, the answer is definitely not. It's definitely not a good idea to blindly follow whoever it may be into whatever it may be, unless it's your spouse and it's shopping maybe. But because a big part of investing really is, a big part of shopping too, is having conviction, especially when you're investing into something as volatile as junior mining, right? Where the norm and the expectation is to lose money. So it's more likely to result in frustration than fortune, if you will, because these guys often have a different timeline than you. They have deeper pockets than most of us. I still don't know if that's true for Luke, maybe, but for most of us, it definitely is. But they also have different risk tolerances, right? Oftentimes, though not always, there are better deals set aside for them than there are for me, and the different deal flow to begin with, and often different incentives too, and so on and so forth, right? The difference is just rather pronounced, if you will, here. So that's why I'm already saying no. It's not a good idea to blindly follow anyone into anything, and following billionaires into. And I know I'm kind of ranting on at this point, but as I said, I'm having thoughts. Might as well get them out. But following billionaires into juniors is it has a certain allure to it, and I understand that it's tempting, right? Because they must know better than you do. Because it kind of feels like you're getting a backstage pass to participate in the big leagues, if you will. But it's more like you're more of a viewer in a game where the players have different rules and objectives, but you're still putting risk on the line. Unless, of course, you have the same connection, same risk tolerance, same patience, which doesn't happen often. Your entire investing journey is going to look different than theirs. So again, to me, not a great idea. But instead of blindly following, what I do understand is using billionaires or their moves as a signal to do more research and investigate further, like what's happening, what is this company, why are they going in, but always on your terms. Take your time and don't let them kind of give you FOMO, like, oh, this company is doing a financing, there's a billionaire or two, billionaire X, Y, and Z, whatever they're participating, they're taking a big chunk, therefore I should also buy right now at this price, not even look at the warrants and not even look at anything else. That's kind of the FOMO that I have experienced myself. And so I still wonder, though, what if I have done the work and I want to buy into the company regardless? Would, in that case, co-investing with billionaires make any difference to my portfolio? That's maybe a better way to set the stage here instead of thinking of should you follow them blindly. I don't think you should, but is that maybe a better way to do it? And as one viewer put it last week, Luke, I made a list. Tenhave has, wait for it, he's made a list. So take it away, Luke. What do you think about what I just said, and what's your list telling us?
Yeah, well, that's true. I always want to make a list first. If I think
Yeah.
of something, I want to put it into a list. Yeah, right. Um, no, I disagree to a number of things you said, but not probably because I have a different process of looking at news and investing in these things. I typically want to I want to know most companies, like 80% of the companies on the exchange, I know a little bit, I would say. Almost any name you could mention, I would say, yeah, that's probably this company active in BC. And of course, I don't know about 2,000 companies in detail, but and if you already have a bit of an idea what a company is doing, and then somebody comes in, you can also make that decision a bit faster. And sometimes I'm also the longer term investor typically, but sometimes I can decide quite quickly. And a good example is earlier this year in Montage Gold. I knew that Montage was reviewed by analysts and but also investors that I know. people that saw it as a sort of a cheap development play, trading probably below $100 million at the time. And Lundin was already involved. They did a deal with them a year earlier. But then in March of February, I think this year, it became obvious that they announced that the Lundin family did a new financing. It would become a part of the Lundin group of companies. And they would also bring in the capital and the people to really start building this. And this was a very obvious news release to me. Like, we have done our work. We are actually gonna make it, bring it forward, move it forward. And at that point, I think it was a 4 million ounce or 6 million ounce deposit, with Lundin's coming in a bigger way, trading for 100 million. People already waiting for a number of years for it to happen, but not happening. I felt at 75 cents or 70 cents or something, this is a low risk bet, especially short term, maybe also longer term. And the first day it didn't really move that much, but then in the days after, the thing started moving and pretty quickly doubled to $1.20 or $1.40, and now it's trading close to $2.50, I think. So that one I decided within an hour I'm gonna buy this one today. With okay size. In hindsight, I think I should have bought it bigger, but of course that's very easy to conclude in hindsight. And there's a number of other companies in this list that I will not mention right now immediately, but that I bought immediately after announcement of, for example, Lundin's coming in or Pierre Lassonde coming in. But these different, I selected these 5 names, the really, not the corporates or something, but really Justra, the Lundin's, Lassonde, Wark, and Beatty, because those are sort of the giants, the whales of the industry. And maybe you can think of other names as well, like Eric Sprott. But Eric has so many investments that it becomes a bit more difficult to know which one is really important to him. Of course, the check size will show that in a way. But I feel like with Eric, it's a little bit more difficult. If the Lundins come in a big investment, it often means really something. And when Justra comes in, I see that in a different way. I don't see Justra coming into a company as a sign this company is really gonna make it. Maybe a promote is going to happen, and of course that doesn't sound really positive about Justra, but we can discuss it in a moment. The differences that I see between Justra coming in and Lundin's coming in, or Lassonde coming in. I think they all have a little bit of a different profile and way of working. So every different person has also a different way of dealing with it from my point of view as a private investor following these people.
Part of it too, and I think a big part of finance as a whole, is understanding what the incentive is of the people who you're playing against or the people who you're playing with. So if you decide to play with billionaires, it's good to understand what their incentive is. There's one question, I wrote something under one of your posts on Twitter last week, but a question that I often ask out of junior mining CEOs when I speak to them for the first time is, what percentage of your net worth have you invested in this company? I understand it's too personal of a question. I don't need an exact percentage. What I really need to understand is how important is that investment to them? Because I don't know what Eric Sprott's net worth, for example, is, but if he invests $5 million into something and his net worth is $5 billion, then that's what, 1/10 of 1%. So if someone has a portfolio of $100,000 for juniors specifically, or a net worth of $100,000, if they want to have the same incentive, they got to invest $100 into it. And that's really, there's no real point in doing that, right? They oftentimes also just take a broad kind of spray and pray approach where they just buy a whole basket of things with a thematic and hope that one of them works out. So yeah, there's a lot of things that I'd say and that I could say here, but what do you like? How did you make that decision more specifically? You said it was only about an hour before you decided you want to jump in. I mean, is there a list, a checklist that you go over before you take it, or like how do you take that decision?
With people like this, it's a bit easier than with a corporate, because a corporate is not in the first instance investing to make a dollar gain quickly or maybe within a year or 2 or 3, but rather getting a level of control over the project in most cases. With these people, I mean, when the Lundins invest at 70 cents, let's just say in Montage, and they invest 20 or 30 or 40 million, I think this is important money to them, not something they cannot lose and be out of a job, so to speak. But but still important money to them. And it's often not the first check; they're going to write a second one and a third one. So I think it depends who it is. The Lundin family is not, maybe trading in small juniors to make a quick promotion and sell. I think that could, in theory, happen with Justra, saying it, not too aggressive. Pierre Lassonde has a bit of a different profile as well, because I think he has also a longer term vision that is maybe not a mind builder himself. So I think if you can see that they are putting in meaningful money, the first, that it may change significant, it gives a significant change to the company. Suddenly they can get financing. Suddenly they have a big backer behind them. So it changes a lot of things to the company. And of course, it's important to know if it has a level of importance to these billionaires. And if they invest $1 million to support a $5 million company, well, it's still a good sign, but it's not big money for them. But then you have to also decide how important is this to the company, to the small company. I would still buy it because a small company probably gets a big lift just because the name gets involved. So I think with these names, when you really, especially these four, Ross Beatty has not been doing very big deals other than his own sort of Lumina, Equinox type companies. But especially Richard Wark and Lassonde and Lundin, those three, I would almost always consider buying immediately if I think the price is right in the market. With Justra, it's a bit more difficult because he often positions himself through private transactions, sometimes at a penny, sometimes at 2 or 3 cents. And in those cases, it's a bit more difficult to piggyback because sometimes you pay 5 or 20 times, 5 to 20 times the price he paid. And of course, then it's not always easy to really make a return. So yes, no, even though they are billionaires and they can lose the money with and not having a problem in life, in most cases these people make a big difference to these companies.
There's marketing value to it as well. I see companies oftentimes trying to use it, and that's something that I always say as well, is that you should understand that most company communication that you are going to see as an investor is marketing. It could be their website presentation, Twitter profile, their news releases. All of that is marketing. Really, the non-marketing documents are on setterplus.ca, and that's the MD&A and the financials and the technical reports. But with these people, I also wonder, is it really just money? I understand money is part of it too, but if they make a $5 million investment and it 10x's and it goes to 50 million, does it change their lifestyle? I don't think so. And if the 5 million goes away, if it goes down 90% or it goes to zero, does it change what they have for breakfast? I also don't think so. What it does change though is their image and the way they're perceived in the industry. And so with the Lundins are being very serious about what they're doing in this business, and they want to continue building the empire as if, in the future for a long period of time. That's my assumption here. I think they care more about image than they would about money. And so turning things around can also take time. They oftentimes have longer time frames, as I mentioned at the beginning. I was reminded of something like you sent this overview, and Ross Beatty with Lumina, he's noted his 4.5 years performance. So since 2019, since December of 2019, so let's call it 5 years, is a negative 10%. But I don't even think, all in all, if you count everything together after the deal, I don't even think he lost money on it. So I don't know if I'm making any sense. I'm just saying just a lot of thoughts.
Well, all these, we can discuss the list a little bit. I didn't want to make it average performance on all of them, because especially the 5-year list is not really a 5-year list, because some of these companies have been in their portfolio for a shorter amount of time. So I changed the price to the point when they got involved in the last 5 years. But I think, again, it's important when they commit to something. I think you have to consider that they are more price sensitive than you think. I heard a couple of stories about the negotiation with these people, before the name was announced, and those negotiations are hard and are, it's not that they would just pay a little bit more because the price is there. I mean, they make hard deals sometimes with these companies, and then they have to commit to a number of years. I mean, we can buy it in the market, piggyback it, and maybe after a 5x sell it if we are smart enough. They can typically not get out, especially if they get really involved in a big way with these companies, and there's not enough liquidity to sell down. And when they start selling down, they have to report it so everybody will know, and the stock will tank. So the benefit we have is that we can piggyback and sell when we want, and when they get involved, They have typically a longer term vision with these companies, unless they have a strategy of quickly going under 10 because of new deals. So if they get involved and then they announce a big acquisition, and they very very quickly go under 10%, yes, then they also are able to sell maybe when a company is a bigger one, but just because of merging or something, two companies. And if you really look at the performance, especially the Lundins, have been doing really well, but also Pierre Lasson's company, almost over, no matter if you look at the last 6 months or the last 5 years, those companies have been doing well. And all of them, I think you can give them, the label quality companies. Of course, they become quality companies because they are involved with it, so it has two sides. But in most cases, there's a good deposit, or they are looking for good deposits, and they, buy these things into these companies. So Montage Gold was a good deposit, and the Lundins decided to really put a lot of effort and money into it with their team. Highlander Silver is Warwick's deal. They bought a property, so they got Lundin involved and Pierre involved, Warwick and Lundin involved, and then they buy a property at a higher price. So they used that, that higher price that was a result of them coming in to buy a property. And Faraday Copper, for example, they have three big names involved, and the property was already there, so they evaluated the property and decided to buy this company because of the team and the property. So indeed, you have to look at, why are they buying? Do they already have a deposit that they want to work with? And if you realize what that company owns is not amazing, then the other option could be that they are just getting in a sort of a shell, and with that shell buy a project. Sometimes you can consider the project that the company has almost, I wouldn't say meaningless, but I think in most cases, the examples we have here on the list, these companies already have the deposit and they get involved because they like the deposit, but the people behind the company cannot really make it work themselves, and that changes when these people come in. With Justra, I had a couple of examples here. Again, he of course has built good companies and I don't want to sort of try to say bad things about his career. He has built amazing companies, but most of the companies he has been involved with in the last couple of years have been difficult for me, for example, to get involved in the market, because these companies are often, you see a shell being halted, then you see them buying, announcing a private deal that they recently did, then they buy a property, and then the company starts trading again at 4 times the price. And that's the price that the market participants can buy and the financing participants can buy. So they get the immediate 5x or 10x or 20x. And from there, you need to calculate what's this project worth in combination with this team. And that's a more difficult thing to do. And that's why I think it's more difficult to buy something in the market and piggyback a Frank Justra deal versus a Lundin family deal. You probably still pay a bit of a premium in most cases, but not as much as in Frank Justra's companies. He has, for example, if you take, let me just take one example, MCF Energy, Justra entered at 1 cent in a private deal, and the stock for him went 75x within 1 year. The cheapest you could have gotten in as a person like me would have been 20 cents if they allowed me into the first financing. If not, you would pay about 30 cents. And then it spiked to 75 cents and fell back all the way to 15 cents. Justra is very good at spotting a trend, I think. He was very early with a Bitcoin company or with a blockchain company, and that was an amazing trade for him. This MCF Energy was started just after Russia and the Ukraine situation, when all the gas prices went up, and he quickly acted by buying gas properties in Europe. So he's very good, I think, at spotting a certain theme and then building a company around that topic. And with the other persons in the list, I think it's more about finding a very high quality deposit or project that has not been recognized yet by the broader market, and a team that cannot really raise the money at very good prices, and that's why the share price always lags. And then they get involved and suddenly make it work. So I think that's why I call Justra companies typically a bit more of a promotion, which of course, I'm not sure if it's completely fair to just put that label on it, but I think the last couple of companies can be called like that. Like Hive is still a big blockchain company, but it spiked like crazy from 3 cents to $6.80 in 6 months. It's difficult not to call that a promotion. So West Red Lake, another Justra name, is I think a serious play trying to build that pure gold mine in Ontario. Pure gold went broke on it, and Justra bought it. This one as well is again a company that you cannot really buy and get an immediate lift. You can see that the share price hasn't done a lot if you just bought in the market after the deal. So again, I think Justra plays are more difficult for people like us to participate in, and the Lundin plays and the Pierre Lassonde plays and the Wark plays are a bit more easy. At least the public ones. These people also own things that are below 10%, and then of course you don't know and you cannot really play that game.
Yeah, that's another thing that I wanted to touch upon. And what else I'm thinking about though is have you looked at what happens? What's the aftermath of their name being announced when it comes down to them getting into a company or financing? Because I'm thinking, what happens? Is there a spike? I mean, if there's if the news alone can spike the stock, sure, that's the performance that you've recorded here is after the point they got in. But what about the people who followed them in but bought at a maybe much higher price because the stock had already spiked to a higher price after the announcement? And that I think also changes things. So what does the stock typically spike on the day of announcement, or how does that work?
Well, every deal is a bit different. This list, I mean, to really go in detail about this list, we would need an hour or so. Like the Montage Gold example, I participated. There was plenty of time to buy 75-cent stock, but I think a lot of people didn't really recognize the importance. If you think about, for example, Pierre Lassonde's involvement in Foran, he was involved since 2014. But when Dan Meyerson got involved in 2020 or 1920, I didn't notice this. This was a very meaningful change to the company. Other people did, and the stock went from 50 or 20 cents to $5. So sometimes they are already involved, but another event sparks the interest. ATEX, same thing. Pierre got a 14-cent deal, and I think the moment it was announced, the first price you could get shares is probably 24 cents or something. So it's almost doubled on the announcement. So it depends a little bit on the company size and the way it was announced. Sometimes they already were shareholders below 10%, did a transactional or like transformational deal to the company, and then bought more stock, got a 10%, became 10% holders, and then it becomes known to the world that they are involved. But then there's already a 5-bagger behind you. So it depends a little bit. I think it's important when they get involved to check the early warning report or the news release itself, if they were already shareholders and if their average is already a bit lower than the new price that they announced. And of course, why are they getting involved? Is it because of an existing deposit, or is it because of a management team? Is it sort of a positioning play and things still need to happen? There's still projects to be acquired. And I think the companies on this list are so different that it's very difficult to just say, yes, you always pay a double, or it's very different. Highlander Silver was a 30 or 40 cent stock because of Wark's involvement. Then nothing happened with the company for about 2 years. I owned it at 35 cents and the stock went to 10 cents. And I felt some people left the company and I felt, this may be just a failed one. And then they did a deal with Lundin family and Wark again, got them involved into a 10-cent financing, and suddenly the stock jumped again. And just a month later, they bought a new property, and the stock is now at $1.17. So it was a 10-bagger already since that 10-cent price level a year ago. So it's really, every deal is a bit different. So you need to have a little bit of market insight and experience to, of course, judge a deal. Fuerte, we talked about last week, is one that you can still participate in almost at all-time lows. This is a pretty new company. It was called Atacama Copper. They did a deal with Pierre. He got involved. They vended a number of properties into Atacama, became Fuerte Metals, and now are developing a number of projects, and have also mentioned in public that they are looking for projects. My guess is, as I said last week, that they will buy a bigger project with this company. This is not a shell, but in my eyes, the projects in the company right now are long shots. They may work, but are maybe a bit too risky and to just build a company around. So what I'm expecting is that they will do a more advanced deal. With that deal, they will lift the valuation and will be able to advance that new deal and the 3 or 4 projects they have currently in this company. And that's a way to progress the current projects with lower risk, but still progress them and then get a new project into it. So I think Fuerte Metals, I'm not going to really recommend things, but this is one that I think is worth buying, and I'm buying it. My average is higher than this price, and I'm not trying to promote it. I don't think we need to promote it. It will run when something will happen, and maybe not earlier than that. And the timeline is completely uncertain. But I have a fairly. My expectation is that this stock will do well at a certain point in time, which could be a month from now, which could be a year or 2 years from now. But Fuerte, in my mind, is a company that's listed already that you can buy on the exchange, where Lassonde is involved. But the projects are not exciting me like crazy. I think they are potentially interesting, but risky. And I think a move will only start when they buy something new, and that then they will muscle themselves into this deal and get stock moving. Because typically, these people have networks, and they probably also bought the financing, but there's almost no buying right now. And I'm sure if they buy something that's amazing and that's promotable, then suddenly a lot of people start buying again, and these networks will have the power that you can see they have in certain cases.
They can have power in the right cases, I think. What I mean by that is, and I've been writing some stuff down as you were talking about these things, Luke, because I think it's fair to go and ask the company when they take money from someone like that, what is the next obvious advantage that you're getting? What is the next maybe non-obvious advantage? Because, the obvious advantage is you're getting a bunch of money all at once and you get a big name. That's great. What about from there on? I mean, and there's really 5 things that I wrote down that I could think of that those groups can bring to the table. But it could be an operational advantage. Maybe they bring someone on like Pierre Lassonde, who's a geologist, or Peter Magar, or whoever, who brings geological expertise to the board and to the team, gives them new ideas and whatnot. Maybe it's a financing advantage. So maybe in the future, they're going to keep financing the company or open the door to more financing, because I know a bunch of people who say, oh, I'm not going to buy this unless there's someone I know who's in there, and knowing that a billionaire is in there might be opening those financing doors. There's an obvious marketing advantage, which I think all of them bring to a certain extent, some more than others, as you mentioned. And then you have a potential strategic advantage. So if it comes down to M&A, maybe these people can open up doors and make introductions that the company would otherwise not have access to. And then some of them have a large political sway. They have that they can influence maybe permits, or they can lobby for a certain company if it's especially if it's in the US, but other locations too. So I believe those are the 5 main advantages or the 5 main things billionaires could bring to the table. So operational, marketing, financing, strategic, and political. And maybe there's a couple of other ones, but I think it's a fair question to the company is what does this person bring to the table? Because oftentimes these people do get better deals than what the company would have gone out for if they were just raising capital from you and I. Those people oftentimes they request better deals in my experience. So yeah, what do you think about these 5 things?
Yeah, in a Lundin case, I think you get the complete package. They will probably, especially if they get involved in a company that almost becomes like their own group, then you get, proper management. Project running management. You get executive management. You get financing abilities. But in the Highlander Silver case, they are investors, so you don't really get them, I think, necessarily. But there you have Richard Warwick, who has his own financing network. I don't really know well about Richard's own technical expertise in his team, but I'm sure he has those people in his network as well. Pierre Lassonde, I think, I'm not sure which technical people he uses. He, in my mind, is an investor, but he was the founder of Orla together with a couple of people, and Orla became a big mining company. He was not a founder of Foran, but was instrumental, I think, to that company becoming successful together again with a couple of people. So I think they bring a network, and they bring, they make a company financeable. The moment such a name gets involved, I mean, the moment the Lundins get involved with golddiscovery.com, golddiscovery.com is immediately worth 100x. So maybe it's a stupid example, but having somebody to back you. I mean, one person or a small company with a geologist in it, people may think, yeah, interesting story, but may never work. Will probably never work. The moment that Lundin or somebody else, one of these 5 people, says, "I'm going to help you," and he can press release that, the company becomes investable immediately to many more people. So that's the first thing. It's a marketing thing, like you said. It is a way of financing, and if you can determine from the news release that these people get involved, and not just to give them $1 million because they are friendly to that person, but also because they will bring their expertise and really put some time and effort into it, or their team will, on the behalf of this billionaire, things will just become way, way easier. And that's why, Orla went from a shell to a multi-billion-dollar company. And Foran, same thing. Mawson and Southern Cross. Southern Cross was already a discovery. Mawson owned 50% of it. Was sort of a play on, the discount of Mawson, an arbitrage that Pierre got involved in, and now he is one of his main things, I guess. So I think it de-risks a company on all these different aspects. Main thing is this just a friendly investment because they know the person and that's it? I think Eric Sprott recently said that he gives $1 million here and there just to help people forward. That's helpful because that $1 million will not go anywhere for the foreseeable future, which is better than giving it to 30 or 40 people, those shares, for $1 million. But it will not maybe completely change the company. But the moment a person comes in and really decides to help that company forward, everything changes in my mind. And that's why I think these announcements are game changers. So not like you said in the beginning, buy them blindly, but if you can recognize that it's a game changer, in the case like Montage this year, it was I didn't make it, to be honest, completely from 70 cents to $2.50. I sold earlier. But you can make 5 beggars with way lower risk than buying these small juniors that are trying to find something on their own without guidance, let's say, from these people.
Yeah, and it comes down to, it goes back to having the right people in there and having the people in there who can give the company what the company needs right now. And most of all, it's important it's important that you understand why whatever's happening is happening, but it's important for the company to understand why they're doing it. And I think it's a fair question to ask them. Why are you getting them in specifically? Did you have a choice? Did you not have a choice? Or is it just the money? So that's also what I'm thinking. Nothing else to add here. What else are we talking about?
Well, one thing I want to add, because I said a couple of things about Justra being a more difficult one to piggyback these deals, and maybe also being a bit more promotional. If there's one, bad one in this list of the Lundins, is Bluestone Resources. Amazing project, very difficult country. They said they would get a permit last year. The thing spiked. I bought it. I felt, wow, this project with the Lundins and now with the permit completely changes everything. But then there was a lot of opposition against that permit, and even the government, I think, went against it. And the company tanked again. Was trading at 20 cents recently. I was thinking, wow, this is almost like a shell with a real project into it. And the Lundins, and they just sold to what's the company? Aura, I think it's called, for a sort of disappointing price. So Bluestone is not a successful one for the Lundins or for shareholders who didn't buy below 30 cents. Maybe Bluestone is still an opportunity because with now you get shares of Aura, and maybe the idea is that the Lundins will become, important to that company. I don't know that. I find that's more difficult for me to know, because let me have a quick look. Aura, I think, is a $1 or $2 billion company. Yeah, $1.3 billion company. Had a pretty big run, and they are buying Bluestone, so they think they may get. I think it's a smart buy because they can buy it for not too much, and they get an amazing project into their big vehicle, and they can give it the capital, and they can put some people on it to try to, through law, get that project permitted, go against the government decisions. And if that project gets its permit, it's very valuable, but still in a risky country. So I think this was not a good deal so far, the Bluestone one, but maybe in the Aura umbrella and with Lundin's becoming shareholders of Aura, maybe that's a company to follow. But I'm not too certain of that. So that's one that I would just say as a negative one on the list of the Lundins.
That's been a good overview, I think, and it's also a good message to put out there, I believe, is that blindly following them is not necessarily the strategy, but you can use it to start an investigation like you have a couple of times. But it still doesn't excuse you from doing your own research. So, yeah, that's it. What are we doing? Are we moving on to the James Bay area?
Yep.
Good.
I don't think there's any of these 5 persons involved in this company, but nothing... it doesn't mean that we cannot have a good look at that company and see if it's investable at this stage.
All right, moving on. Luke and I are going to the James Bay region of Quebec together because apparently there's new discoveries to talk about. Many different, I was going to say metals. Can I say that? Yeah, metals. Maybe I can say it. Luckily for us, though, and for the viewers, we're not going to be there alone. We'll be joined by Jean-Marc Lulin, who is, of course, the CEO of Azimut Exploration, which is listed under the ticker symbol AZM on the TSXV in Canada, where an average of 47,000 shares trade each day with a 52-week high of almost $1 and a 52-week low of 42.5 cents. With a $57 million market cap and 85 million shares outstanding, today this is a 67-cent stock. Share structure is not the only reason why we wanted to talk to you today, Jean-Marc, though. We want to talk about what you've been doing there these last few months, which is a lot, really. You're dealing with many different projects. You got a lithium project. You now a nickel project that is going to get drilled by your partner. You have obviously a gold project, and now even since this week, essentially, you've got an antimony project. So, what's going on? What's really the story of Azimut now? What's the focus?
First, I would like to say that mineral exploration is our core business. We are passionate about mineral exploration. It's our expertise. It's our know-how. We have been involved in Quebec over the past 30 years. And we know very well that exploration by itself is a risky business. On one way to have a better chance of creating value for the shareholders is to not rely upon one project, one commodity, one partner, one region, but it's to concurrently address several, concurrently advance several excellent projects. And it's what we were doing. It's our core of our exploration strategy. The initial step is to process the numerical database and to select hopefully the very best targets for specific commodities, acquire the project, and launch exploration programs. We have been very fortunate this year to be able to concurrently operate more than 15 projects, which are part of our portfolio. And this is not an overnight success, but we have been rewarded by outstanding field results on several key projects.
Well, I think we'll get back to this point maybe later in the conversation as well, but I also think it's important to go through some of these discoveries that I mentioned here. What's top of mind for me, or what caught my attention, and apparently the market's attention too, because there was a spike in volume, is what you call a new nickel discovery that you and your partner KGHM announced at the end of September. But this is a rock chips and a channel samples that led to the almost 3% nickel grades that you have in the headline of that news release. And I've known you for a while, not too long, but I've known you for a little over a year, I believe. Luke's known you for way longer than this, and he tells me you're anything but promotional, yet you're calling for discovery based on outcrop chip samples. So talk to me about that. What exactly did you find, and why is it fair to call it a discovery?
Okay. Yeah, we're not only talking about chip samples, but channel samples, which by itself is revealing a thickness. We are talking about 3% nickel over 8 meters along a channel sample. We are talking about 1.1% nickel with PG as well over 9 meters. And this is providing you, a thickness of a mineralized system. It's not only a graph sample, an isolated graph sample. While we believe that this may be a significant discovery, it's related to the regional geological context. First, there is a very strong nickel footprint at regional scale in lake bottom sediment, and this attracted us to the region. At start, we were quite convinced that this footprint may represent a potential significant nickel source in the bedrock. Early 2023, we flew an airborne survey. Again, the project has been optioned by KGHM, and we flew an airborne survey which covers the property very quickly. We identified strong electromagnetic anomalies, especially related to the lake bottom sediment footprint in nickel. We started to do a prospecting program. We discovered a first nickel showing last year. Unfortunately, the fire started at the regional scale. We had to stop our prospecting program. As soon as we restarted the prospecting program early this year in 24. And very quickly, we found the source of this EM anomaly, which is this new nickel prospect. What is interesting in that case are the grade. High-grade nickel, relatively high-grade in copper. Nickel-copper ratio is highly indicative about the fertility of the system. We're talking about a rich nickel source. Also, the PG, palladium, platinum content is high. We found up to 12 gram per ton PGs. And it's related to ultramafic volcanics, komatiite. And overall, the context is quite comparable to a well-known mining camp in Western Australia called Kambalda. And there are many similarities. Again, we're at an early stage, but there are many similarities with what we see at Kukamas on the Perseus prospect with a Kambalda type.
The best channel sample was 3% nickel, which is very high grade, I think, 0.3% copper and 2 grams PGE over 8 meters. There's 8 meters. Yeah. What does that tell you? Because you have outcrop. Is that covering the width? Can you say if that's true width, or is that difficult to say from an outcrop?
Based on the rock sampling, we believe that we are close from true width because the channel samples have been cut perpendicularly to the strike extent of the showing. And of course, we believe that we are just like very close from true width. And again, the channel samples by itself are open to the east, uncovered by overburden. It has not been possible to extend further east, but potentially it's open. But according to the distribution of the results, yeah, we believe that the strike of the mineralization is north-south. It's concordant with the MAG footprint, with the EM footprint, with the overall geology. And it's the reason why we believe that the channel length more or less represent a minimum true width.
And
Anyway,
Kambalda,
yeah, at the end of the day, drilling will tell you if we are right or not.
no, for sure. But right now you're already naming Kambalda. What leads you to believe this is perhaps similar to Kambalda, as that was Kambalda has 22 deposits, I believe, of high grade in Australia. What is it that you see that makes you compare it to that specific deposit or series of deposits?
Again, it's not to say that we are talking about Kambalda, but it's comparable. When we see a range of nickel deposits, it's not Sudbury, it's not Norilsk, it's not Jinshuan. It's related to ultramafic volcanics. From a geochemical standpoint, these volcanics are komatiites. Kambalda is related to komatiites. The nickel copper ratio is very comparable to what is known in Kambalda. The PG content as well. The overall shape of the mineralized zone, as far as we know it, is also comparable to Kambalda. It may be also compared to Raglan in some respects. We don't want to move forward too much, but if we have to put what we have found in a box, the closest box would be Kambalda or Raglan. Of course, there is an enormous difference in the scale. We are at an early discovery stage. We will see what will happen with drilling, but at current time, it's a quality discovery based on the grade. And grade is critical to assess the fertility of a system. Again, the nickel copper ratio tell you a lot about in which box you can put this discovery. And according to the metal ratio, it's relatively close from what we know at Kambalda or eventually Raglan.
I want to talk about some of the specifics that maybe Kambalda has already dealt with, and you tell me how you're going to deal with them. But you're talking about semi-massive to massive or disseminated pentlandite, pyrrhotite, and chalcopyrite within a brachiated ultramafic host. Yes. What is that going to mean? Which is I had to practice in the mirror for 25 minutes to say all these words at the same time before saying them here. But what is that going to mean for your metallurgy? That it sounds complex, but is it going to make your metallurgy more complex?
We are anticipating a lot, with metallurgy. It's a classic nickel copper ore. It's very, very difficult to make a statement about metallurgy. What is very interesting is the grade. This is making a difference. And if we can keep the grade the same way as for the prospect, by drilling, this will be extremely exciting. One another comparable point I forgot to mention is the age. Kambalda is Archean. Here we are also dealing with an Archean age. One another point which is common with the Kambalda is the brachiated nature of the mineralized sashes. And brachiation tells you that we had been dealing with a very dynamic system. It has been a turbulent system, which is also recognized as a good sign for fertility. It has not been static, and this may explain the grade. There are many other factors which tell us that we are dealing with a fertile system. Regarding the metallurgy, we will address the question later with more drilling results, saying that what is key is deal with high-grade system. And as far as we know, this is one of the best nickel discovery in the James Bay for a long time. Also, the PG content is very interesting.
This is not you're not drilling right now yet, or maybe you will be soon, but this is channeling. When I see it as an investor, somebody do grab samples could be interesting, but for the investor, in most cases, not a reason yet to buy if you're buying discoveries. Yeah, channel samples get a bit closer to it already because you have a sort of a continuous proof, even though it's on surface. What is your experience with this type of system, for example, finding it on surface, but not finding anything at depth? Is there a risk there? Or what's the likelihood of this not continuing to depth, but just being there at surface?
Of course, this is a good question. It's a question that we have for ourselves. A way to address this question, of course, is to deal with the geophysical results. We're relying upon the geophysical results to put drill holes at the right places. But at the end of the day, only drilling will tell you if we hit or not. Saying that, the positive side, the grade on what we see in terms of mineralization, it's fantastic. It's really, really nice. Now, the geometry of these deposits is highly variable. The thickness can change dramatically on the positive side or on the negative side. It's not because you have a barren hole that few meters away you can find a fantastic section. It's highly variable. At start, we will be very conservative. The drill pattern will be very conservative. We want to track what we already found at surface. The drilling approach will be very conservative. And if we hit, we will be a little bit more courageous. We will, it's like a step-by-step approach. Of course, we don't want to lose mineralization by being too risky. It's a discovery. It's a surface discovery, high quality. We want just to confirm it by drilling. Again, we are sharing the same view, the same approach as KGHM. We are working it's a full exploration team. We have continuous conversations. The dynamic is very, very good with KGHM. They are very good partners. And for them, there is no question. We are dealing with a drill target, with a true drill target, with a potential.
And this might be another question that drilling is going to answer for you, but geophysics might be helpful in it too. But you mentioned that the mineralized zone follows a curvilinear, steeply dipping structure. What's that telling you about the geometry of this potential ore body at depth?
Again, geometry can be highly variable. Classically, in the Cambalda type, we foresee the same pattern here. We're dealing with mineralized channels at the bottom of ultramafic flows, and we are dealing with sulfide-bearing channels which have been precipitated at the bottom of an ultramafic flow. It's a very dynamic system, and of course, the ultimate size will be driven by the geometry of this channel. The channel can have variable extent in terms of thickness, in terms of vertical length, lateral length along strike. It can vary from 50 meters as a lateral extent up to 200, 300 meters, but have very, very long extent at depth up to 1 kilometer or more. And we can't anticipate at current time. It's definitively a drill target with a very good start, which is a grade, which is the geological context. Now, the shape of this channel will be defined by drilling and eventually by in-hole geophysics.
We've got plenty of other stuff to get to as well, and I understand we're going to get to them. But there's one more thing that I want to ask about this nickel discovery here. There was already some great variability in the channel samples themselves. So is that telling you anything about what's happening at depth? Because those two samples were not too far off from each other, and we're already seeing variability. Is that telling you anything about what's happening at depth?
In our view, there is no so strong variability in the grade. When you have like a 1 to 5% nickel, what is key is to appraise the nickel copper ratio, which is quite consistent, and also the PG content. Ratios tell us a lot. I'm not too afraid by the grade variability at this point of time. Further west, you have lower grades, which means that you may be to the top. The top of the flow would be to the west on the base. The bottom would be to the east, and it's the reason why we believe that we may be at the bottom of an ultramafic flow dealing with a massive or semi-massive nickel sulfide mineralization at the bottom of the flow. And this may explain the brecciated nature of the mineralized facies. Again, the grade variability could be related to the percentage of fragment you have in your channel. Like if I take this, you see the fragments, which may explain why in some cases you have very high grade when you sample massive sulfides.
Lift it up a little bit.
Yeah.
And then a little bit higher so we can, okay, there you go. Yeah.
Yes. Yeah. And the grade could be a little bit lower if you have a higher percentage in fragments. Anyway, it's a good start. And again, this is telling you that there is a possibility of finding high-grade nickel related to ultramafic flows in the James Bay region. And this has been a long-term approach for Azimut. It's just confirming that we were right in the way we are processing the data to identify regional scale targets. And we have many other targets at the scale of the James Bay region. And this is, of course, raising the regional scale potential for comparable unexplored targets.
When are you going to drill this and how many meters?
Okay, we will start drilling in 2 weeks from now. And the initial drilling step will be 2,000 meters. And of course, if we hit, much more will come. We know on the project a number of other high-quality targets, which are still advancing, not really at the drill stage, but if we hit, this will open the door for much more drilling.
All right. Well, I think there's more TBS, but there's more projects within Azimut. So you like the word discovery because in September you mentioned this discovery, the nickel discovery, and a month later you have a press release out. I think it's just 2 days ago. Azimut discovers high-grade antimony zone on the Webbermisk gold property. So you found gold and antimony in, again, channel sampling. Tell us a bit about this discovery.
Okay, I have to be totally transparent. Webbermisk by itself has been one of the first projects Azimut acquired in 2003. It's stable, 2003. And the reason to stake this property was its antimony footprint at regional scale. And for us, we see a very strong spatial correlation between the antimony footprint in lake bottom sediments and gold deposits. From a statistical standpoint, it's highly reliable. And we stake this property because it is the strongest and the largest antimony footprint at the scale of the James Bay region, over a 170,000 square kilometer surface area. This is the first point. At that time, we were at start with Azimut, and we decided to option the property to Goldcorp, to Placer initially. Then the property has been transferred to Goldcorp, then to Newmont. And they were operating on the project. The database which has been acquired was very, very good, high quality database. But in terms of the strong will to make discoveries, it has been a little bit a slow process, or even a sleeping process. Then we regained full control of the property in 2022. We restarted to reprocess the database, and we identify in the mid part of the property, some antimony grades up to 2.7%. Related to a shear zone, related to a strong IP anomaly, related to a high footprint in soil, and we rank this target as the best target at the scale of the property. We went on the field this summer, and the key step, we have been able to move the best 2.7% grade in antimony to almost 25% antimony. This is a key step. It's a factor 10. Related to good gold grades, up to 7 grams per ton. Now this is confirming that we have a high-grade antimony system with potentially a long strike length. This is just like opening the project with a new vision. Fortunately, the antimony price is booming, literally booming, and this is opened the door for much more exploration on this target. This is a short summary. And again, it's not only related to one grade, high grade sample. Again, we tested the strike with a channel sample. Now we have a very good start, which may indicate that we have a high grade offshoots. The best channel sample is delivering 3.9% antimony with 0.3 gram per ton gold over 14 meters. Clearly, this is one of the best antimony results in Quebec in terms of channel. Again, we are talking about channel. It's the first exploration step, but this is opening the door for much more.
I think we'll get to how the antimony and gold interact, or why they are together here. We'll definitely get to that part. But what I'm wondering now is that, so you own 100% of this project. Newmont used to own 51% of it, though. Why did they walk away? What happened?
Okay, this has been part of a transaction we did with Newmont related to the Eleanor South project. We had in order of 23% interest in the Eleanor South project. We decided to leave this project. It was a three-way joint venture with Fury Gold, with Newmont, based on our interest on the Elmer project, based on our other target at the scale of the James Bay region, we were not ready to continue funding this project. It's not to say that the project is not good, but having a 22% interest was not a leverage for us. And part of this transaction, we returned our 22% interest to Newmont on free gold. At that time, Newmont had 3 million shares, Azimut shares. They returned these shares to us, and we canceled those shares. And Wabamis, they own at that time 51% interest, and they returned the project back to us. This is part of the Olona South transaction completed late 2022.
I think not a lot of people are aware of antimony. I haven't seen many projects with results from that. I have seen Southern Cross with a discovery, a gold discovery, including antimony. There's also a US-based company building a mine, I think, pretty big company.
Yeah.
What is it? How do you understand this system in terms of, do you consider this an antimony project right now? Is this a gold project? Is it a gold antimony project? And is it important that the relation between the gold and the antimony?
Yeah, generally speaking, antimony is a classical pathfinder for gold deposits. It's of course the relationship between gold deposits and antimony is well known, but antimony generally is present as a trace element, not as a major element in terms of percentage. And in that case, it's very, very different. We are clearly dealing with a high-grade antimony system, of course, with gold. And considering the grade, the antimony grade, gold can be seen as a byproduct. But this may evolve deeper. There are many examples where the antimony gold, the ratio antimony gold is higher in the upper part of gold deposits. And when you go deeper, the antimony gold ratio is changing. Gold can become the main commodity. And we believe that in that case, this may be possible. We may change. We may have a deeper, a better gold grade on lower antimony grades. But anyway, we can combine both. We can very easily deal with a high antimony system at shallow depths, and by drilling deeper, this may change. And for us, this is again a strong indication that we may have again a very strong, deep-seated system which may evolve into a true high-grade gold deposit. For example, antimony is consistently present at Red Lake in Ontario, consistently present along the Cadillac Break, of course, in Quebec, consistently present also in the Eleanor mine, but not at such grades. This is really outstanding. And for us, it's a good start. Again, we believe that the quality of the results that we just disclosed warrant without any doubt a drill program. And we will test it in a very conservative way at start. And according to the results, we will expand drilling at depth or along strike. But all the database is we have a high quality database. We have a soil geochem, mag survey, IP survey, and it will be very easy for us to accelerate according to the results.
I was watching this interview with Southern Cross and Mawson because they have this discovery, and they have also antimony at the top, and when they get deeper, they get gold. And for that reason, he specifically said that they wanted to drill very quickly, much deeper, to test if that gold system is there below the antimony system. If you would hit in this drill program that you announced, would that be something that you do a little bit quicker than you would normally go deep to see if the gold is below, or would you start fairly shallow as you would normally do, I guess, and step out? So is there a difference for this reason to drill deeper, or is that not something on your mind?
You know, again, it will be a technically driven campaign. We foresee this project as start as an antimony gold target, but of course, yeah, we are fully aware that the antimony gold ratio may change with depth, and if we see, you know, we have to first define the geometry of the system, its grade consistency, its shape, and this will give us the right answers to drill deeper. But of course, what we see at surface by itself legitimate to drill deeper at one point as soon as possible, hopefully. But again, we're a technically driven company. We hate drilling blind holes. Eventually, we will do it, but at the current step, even antimony has a great value. You know, 1% antimony means like in copper equivalent. Of course, we take all the, you know, just like in terms of equivalent, 1% antimony means more or less 2.5% copper, which means that having a 4% antimony grade over 14 meters is like having 10% copper over 14 meters, which is really an outstanding result.
Is that the reason? Because Azimut exists for 30 years or so, and it only has 85 million shares out. And the only way you can do that, I think almost no one has done it ever in the complete past of junior mining. And the only reason you can do it is because you work with partners all the time, and you're not funding these drill programs yourself initially or at all. At Elber, you made an exception, and you made a pretty big discovery there. That's when the stock really took off a couple of years ago. Was a surprise to me that you didn't option this. Why are you drilling this yourself versus optioning it out to somebody else again?
Yeah, are you talking about Wabamisk or?
Yeah, Wabamisk right now, because this is the second time, if I'm not mistaken, that you're drilling something yourself in the complete history of 30 years.
But clearly, look, because we foresee a real opportunity to create a value with a relatively small investment. You know, what is the best use of your money? What is the best opportunity to grow, to create value for the shareholders? You know, this is a change. This is a material change for the property and eventually for the company. Of course, we are still considering Elmer as a flagship, but Wabamisk can become a second flagship or third flagship. And it's a question of using the best way you can the money you have in the bank. You know, raising money has never been a problem for us. And we have enough money in the bank to advance by ourselves and give a chance to create very quickly a value added for the shareholder based on drill results. It's an opportunity that we can't miss.
When you say you can't miss, you make me think about some of the challenges that might occur here. And off the top of my mind, you mentioned it a couple of times, and I wanted to ask that question about antimony and gold kind of being co-mineralized. What does that mean for separating it? Does that happen often? Is it easy to separate? Recovery rates? Talk to me about that.
Yes. Again, you know, if you deal with you know, antimony is related to stibnite, on the classical way to, it's by flotation. You recover antimony by flotation. With the gold recovery, sometimes is poor because it's not an easy ore. But of course, this may change as soon as you have a better gold grades. You will privilege the gold recovery instead of privilege, taking the option to recover antimony. Again, it's a question of how you can create the best value according to the ore you have. And this may change with depth. But at start, of course, what we foresee, most of the value will be related to the antimony recovery. And as soon as we can, if we hit, we will start doing metallurgical tests to optimize, to optimize exploration and see in which way we will go.
Now that we're talking about recoveries, I'm reminded that we should probably keep it moving here and go to Billionaire, which is your lithium project. You just announced some recovery results from that too. They were variable though, so varying from 68 to 86%, creatively enough. What's the reason? Why is that? What factors contribute to those variations?
We have like pure the ore is very, very clean. The spodumene is a very high quality, and this is explaining the results. What is also interesting, we had like some amphibolite in within the lithium-rich pegmatites, but they can be very easily separated by magnetic separation. And at the end of the day, the end product is of very high quality. It's almost, one of the best metallurgic tests ever done at regional scale. We are dealing with a very, very clean ore.
Well, there were some impurities, though, that were mentioned. Chromium oxide, I believe. Could these impurities impact the final product's acceptability?
No. Yeah, in fact, the chromium on iron content is very, very low, and this can't impact, the quality of the concentrate.
Okay. Yeah, I think
in terms of the discovery itself, I mean, Billionaire, I think, is next to another discovery operated by Winsome Resources, Adina. Was this discovery made because of the Adina discovery? Did you just test your part of their system, or like on your side of the property, or was this a target that you already looked at before?
Okay, for us, based on the Adina discovery, it was obvious that we potentially had the continuity to the south on our side of the same deposit, and we tested it by drilling. We hit. The surprise, the grade is quite good. We have many high grade holes. Which means that eventually the grade pattern for this deposit combining Adina and Billionaire, it may become higher grade to the south, maybe on at least the holes we drilled tend to indicate that the grade is quite high on our side. And it was also a good idea to test from a metallurgical standpoint, this part of the deposit, eventually to render it more attractive and to give us confidence that by exploring around this discovery, we may find, a better continuity. Of course, it's wide open on our side. The property, the Billionaire property itself is a huge property. During this summer season, we have undertaken a large exploration program. We have been able to identify new targets at the scale of the property, which may, again, prove that we are not only dealing with the Adina Galilee discovery, but we may expand with new discoveries along strike the potential of the property. Also, Midland, on their own Galilee property, release interesting results with Rio Tinto. And we are definitively dealing with an emerging lithium camp with great perspectives.
So Adina has a study already out, $1 billion MPV or 750 million US, with a high IRR and 21 million year mine life. Pretty low capex for a project like this. They bought a mill, I think, a diamond processing plant and infrastructure. So they are really moving this project forward. Now you have Azimut with Soquem owning a property next to them with the extension of that deposit. Then you have Rio Tinto, indeed, with Midland finding lithium. I mean, at some point, and of course it's a commercial discussion, but at some point it wouldn't make sense in my mind that all these companies work on their individual discovery in this in this area. What is your thinking process about this? I mean, is there a point in Azimut's history to at some point liquidate some project, or is it something you want to advance because you think about the complete land package and you want to, explore much more than just this discovery?
But it's a classical scenario to have like quality deposits over 2 properties or 3 properties. It's a classical scenario. Of course, there is a logic for a consolidation in this emerging district, and this will, I hope, part of future discussions with all the players involved in that game. It's not a unique situation, as you know very well. For us, this discovery, Galilee, is one part of our assets. Essentially, we try to create value for the shareholders. We have already a joint venture with Soquem. Again, the relationship with Soquem is very, very strong. We have common objectives. If there is an opportunity to consolidate, this will not be blocked by us. We are open to discuss. We have a good relationship also with Winsome, but at some point this will be, as you said, a commercial discussion. But there is a logic for a consolidation. It's very obvious.
So if you don't consolidate, how do you follow it up from here on out while also still having attention for everything else that we talked about?
Regarding the Galilee property?
Yes.
There is no pressure on our side. We have this joint venture with Soquem. We operate the joint venture. And we will define our strategy for 2025 according to the progress made by our neighbors, by the will to advance in our discussions. But there is no pressure on our side. We may advance other lithium properties. We have Piqua, we have Pilipas, we have some other lithium bearing properties we can advance. Some of these properties are under option. Some other properties are owned 100% by Azimut. We have a range of options. We are not under pressure to make a deal. This will come at the right time. Of course, we are keeping in mind all the time the shareholders' interest. We don't want to, there is no fire sale in any way. We are not put under pressure to do any deal if it is not beneficial to the shareholders.
Are you planning any drilling at Galilee in the near term, or is that something that you still have to decide?
Some things that we have to decide.
All right. Well, then let's move to Elmer, which is the flagship, which is maybe not a good reason to to discuss that as the fourth project, but the other ones were more recent, I think, more recent discoveries. Elmer was discovered in early 2020, I think. Well, it was discovered in 2019, but drill discovery in 2020. Since then, you drilled quite a bit and released a resource estimate of 800,000 ounces in both categories, 2 grams, open pittable, partly, I think. Tell me a little bit about, what have you done over the last couple of years? Maybe keep that short in a sort of summary, and tell us what are you going to do with Elmer in the future?
When you make a discovery at start, you believe that you have like an immense blue sky, on you at the top of your head, and exploration is exploration. You always deal with uncertainty. What is interesting with Elmer, we have been able to reach the resource stage, which is a good step for a junior company. There is a major difference by having a resource, a true resource, or having no resource. And now we are a junior with a resource and with an upside. And we were still strongly convinced that the upside still exists. This is based on our exploration know-how. You start with a resource and you have to continue because the context from a geological standpoint is very good, and the property can still be considered as underexplored. Saying that, we have the resource and we have a number of quality targets along strike. We have a number of quality targets along subparallel shear zones. On what we did, the first priority over the last few years was to reach the resource stage. This is done. This is done. Now we move ahead to further define targets which will lead to make comparable discoveries and add new resources to the first one. From an exploration standpoint, it's a logical step. And again, we're not ready to put our money if we believe that there is no reason. There is absolutely no promotional reason to do blind exploration just to if we don't believe that there is a good reason to put our money on the field. Saying that, this summer we clearly advanced the project. We did extensive prospecting on some of the most underexplored part of the property. We reprocessed some of the samples we had stored. We have new ideas, and again, because we had been very active on the 15 projects this summer. Now we have to release some results at Elmer, but of course this will be done, and we will take this press release as a new step to move forward and explain to the shareholders what the next step will be. But the project remain a very good top-class project in the James Bay region.
Well, you seem pretty convinced on that. I mean, you talked about targets, new targets. Are you drilling near the deposit, or are you looking for really new targets, like new deposits on that land package? Because it's a big land package, the Elmer project.
Yeah. It's I would say both. If you put Elmer at the heart of Val-d'Or or at the heart of Malartic, this would be like a true grassroots project in the middle of a mining camp. And we foresee Elmer as an underexplored project within a potential mining camp. I must be very prudent, but there are many high-grade targets which are still undrilled or partly drilled, and we uncovered new targets as well by doing surface prospecting. Again, it's a 35-kilometer long property covering a fertile greenstone belt with many subparallel shear zones, with strong indications that there is a fertile system in place that we must drill. What the missing part for Elmer is drilling. We need to do much more drilling, and this will increase our chances of making discoveries. And to answer your questions, there are two types of drilling. Simply drilling along strike with both sides of the already known deposit, which is still open along strike, open at depth, and drilling targets along subparallel shear zones in close vicinity, within a range of 5 kilometers from Patron, which is with a known resource.
Well, drilling is expensive generally. You're saying that you have to drill a lot at Elmer. You're going to drill at Wabamisk, and you're contributing to Galilee 50%. Kukumas is still paid for by the partner. So are you really planning to advance to 100% projects yourself next year? And is that something that you already have in the budget, or are you raising money for that?
This is of course, this is a question, a very good question. A key part of our business strategy is to avoid dilution as much as possible to be able to create a true value per share. And according to the drill results we will get from Kukamas, according to the drill results we will get from Wabamisk, this may change the game. We may be in the position to demonstrate that we have one or two additional discoveries in our portfolio with a potential significant upside. And this may position us to, we will adapt our strategy or our, the next step according to the next drilling campaigns. Again, there is no stress from our standpoint. We demonstrated our ability to do the right financings at the right time, taking always into account the shareholders' interest, avoiding dilution. This is our doctrine. We want to limit as much as possible the shareholder dilution to have the best share structure as possible, and minimize the shareholder dilution. And again, this is part of our strategy. By having several quality projects concurrently advancing, this position us in a better position to minimize the shareholder dilution.
Is that what you think shareholders want? I mean, is that what shareholders want? And is that the way to shareholder value, to create new discoveries all the time? Because again, as we just went over these discoveries, I mentioned at the beginning that we'll come to this point, but we talked about multiple different, so nickel, antimony, gold, lithium, and there's a bunch of other things in the pipeline. Where's the focus, I suppose, here, and what do you think shareholders want? Is there an opportunity to spin something out? And I know there's a lot of questions at the same time, but that's among the lines of what I'm thinking. What do shareholders want here?
The shareholders want to make money. We want to create value for the shareholders. We want to increase the market cap of the company. Knowing what is mineral exploration, if you rely upon only one property, it can be very good, but from a statistical standpoint, you have small chances of creating value on a statistical basis. And by concurrently advancing a project, one of those projects may hit in a magical way. You never know which one. You never know in advance which one will hit. And this hit, this magical hit, will pay for everything, will create the magical value you expect in your business. And again, it's a way we are using to better manage the overall business risk. And it's a trade-off, by advancing sometimes with partners, sometimes alone, we try to mitigate the overall business risk, but the ultimate goal is very, very clear. We want to have this magical point on hit at the right moment on the right project, but we never know in advance. And the only way to mitigate this risk is to have more than one excellent project advancing. There is no other way to do. You know very well the failure rate in our industry. And again, there are several ways to have a competitive advantage. The very first step is to be at the right place. Being at the right place means having an edge in terms of vision. Where are the best targets located? And this is done extensively done by Azimut through systematic numerical data processing through Aztec Mine. And this led to many discoveries. This position, Azimut, we have been able to attract many quality partners, including Newmont, including Rio Tinto, including Soquem, including KGHM, many quality partners through time to mitigate this exploration risk, to minimize the share dilution rates through time. Now our properties are maturing, they are more advanced, and we foresee, we were right in acquiring those properties. And because Azimut is growing by itself, again, Agnico Eagle is our largest shareholders, and they are fully confident in the way we're advancing our strategy. And, we have optionalities. And of course, at some time, we may monetize some of our assets. We may do an additional financing to further advance some of the assets. But of course, the ultimate goal is to create a rich company by being fully recognized with a magical point we try to reach. I'm very confident that we reach it.
Well, it sounds like after 30 years of business, there's a perfect storm going on at Azimut with perhaps multiple discoveries. We didn't even discuss maybe 5 or 6 or 7 projects with news, but it was just too much to cover, I think, in one interview. So I want to thank you for the interview. I don't know if Antonio has anything else to ask.
I think I'm good for now. We've been at it for, I believe, over an hour actually. So it's been good. It was a very good in-depth overview, but there's so many things going on. So hopefully we can do it again soon. It seems like you're going to have a lot more answers over the next, let's call it a couple of quarters here. But no, I thought that this was a good overview. No more questions. What do you think, Jean-Marc? What are we forgetting to ask you? What do you think is important to talk about here?
No, I believe that your questions were, very, very good, very pertinent. You know what I can tell you, we are technically driven, but we want what it's not only about technical successes, it's all about business successes. On I think we are reaching the point where we will bridge the technical successes toward a financial success, because this is the ultimate goal, creating wealth through our expertise. And we are bridging now significant advances on the technical side toward the financial success.
That's a great point to end the conversation on. Thank you so much, Mark, Jean-Marc. This is Jean-Marc Lulin out of Azimut Energy, and that's AZM on the TSX Ventures Exchange. Again, thank you so much for sitting down with us.
Thank you. Thank you very much. Goodbye.
All right, moving on. I'm going to have to be at multiple places at the same time because I have one more conversation for today. And this one is going to be, the previous two were obviously interesting as well. This one, I think, is going to be a very, very interesting conversation here. And Jean-Marc, it's not every day that you get to speak to two people that have a very similar yet a unique name. So I just spoke to Jean-Marc Lulin, which is French. And then now I'm talking to you, Jean-Marc Stouty. And so I just wanted to note that. I don't know if anyone was going to notice or not, but I'm kind of a geek for these things. And you and I sat down for a conversation on RiverSide Resources not too long ago. And we also have another RiverSide update coming soon, hopefully. But today I want to zoom in on the man behind the company. As I think a lot of people who might follow your story, they followed the RiverSide story, but this is almost as much a Jean-Marc story as it is a RiverSide story. And for example, I didn't know that you have a PhD in geology from the University of Arizona. So talk to me about that, a PhD first. Like, how did that came to be? Why geology? Why a PhD in the first place? Is that something you wanted to pursue academically, or do you think it's needed for the business? And most of all, why don't you make everyone call you Dr. Stouty?
Yeah, so I guess I'm delighted to have had the opportunity to study and go to good schools. And both of my parents were professors, and I thought I'd be a professor. And so after completing my undergraduate degree in geology, I went and did a master's degree in economic geology at Harvard. And there I found that, at Harvard, it was very academic, and I wanted to be more applied. And so I had the chance to go and do exploration with Kennecott and Rio Tinto, where we found the Mulatos deposit. And that was great. It's now called Alamos Gold. And there I found it and decided that if I was going to do a PhD, I should do it before I had children and kind of wanted to go on with the rest of my life. So I asked the company there at Rio Tinto if they wanted to sponsor me, which they did not. So I notified them that I was going to move on, and I found financing of 10 different corporations to finance a large new institute now called the Lowell Institute, named after David Lowell, that I founded at the University of Arizona. And we did a PhD on the mineral deposits and ore deposits and exploration potential of the country of Mexico. And it was fun. It was a large study with the who's now the current CEO of working with Philo Wojtek Wojcicki and many other people, Moira Smith with Liberty Gold, and lots of people that have been very successful in the industry while working with me at this institute that we started. And why do a PhD was because I really wanted to make sure that I had a good, great, in-depth interest in what I wanted to do, and it created an opportunity that I'd know for the rest of my life. I could always move into academia if I wished to, but I've really found that I love the appliedness, and no reason to put any titles behind names or hold that over anyone. It doesn't really matter. What really matters is creating value of everything you do in life, and particularly for shareholders and for stakeholders, and making a difference. And so I found that if I, had a PhD, have a good depth of knowledge, that's great, but I don't really put any title on my card or anything like that. I just get after the work that we do and really love it.
Did you work with David Lowell?
I didn't. David was doing his other things like that. And it was kind of fun when he had the discovery Perina, which got taken out for $800 million as Arequipa Resources. It was a lot of fun because I was working on the Mulatos deposit, which is a similar type of deposit. And today, RiverSide is looking at other high sulfidation epithermal gold systems of this type. It's one of the types of deposits that I think really can make company difference. And so it's one of the filters that we use is deposit type. I was not working with David Lowell. And, David was just an amazing discoverer, working with Jorge Fierro and other really great people doing super good work. And I was lucky enough when David, he said, good talk, kid. When I gave my presentation, and there was a lot of similarities to what he was working on in Peru, what I was working on in Mexico. And that was really great. But he was very much of a gentleman and a very good explorer, and amazingly person of action. And so that was great. He was actually a mining engineer, not a geologist. I thought that was very important. Looking at it from an engineering standpoint right off the bat is one of the key filters that I try to do. And when I look at a project is to see what would really become a mine. And I've looked at thousands of projects and visited thousands of projects. And when I go there, I'm always thinking about how is this going to be a mine? What would be really the ability to do this? And I've steered away from many, many projects that were just topographically or location-wise or other aspects of it were just not going to really be a place that should be a mine. And so if you go to places that should be a mine and look at it from that perspective, rather than looking from just technically where I could find ore, but part of ore is actually fundamentally at the end going to be economic. And so part of my PhD was in mineral economics at the University of Arizona. And I really had a lot of fun figuring out what would be economic, not just where one would find grades and tons.
I didn't know Mr. Lowell myself. Unfortunately, may he rest in peace. I was a couple of years too late, I suppose. But I wish I did. And I do want to talk about that once we get to it. Like, how do you pick your projects? What are some of the criteria that you use for? And you're already giving me a couple of teasers there. So we'll definitely get to it. But you've been in the mineral exploration business essentially since you got your PhD in 1995, I believe. So you've been, and from before that, obviously, you had to get interested. But so you've been, over 30 years now, you've been in the mineral exploration space. What do you think investors get wrong about the industry as a whole? What's a misconception that maybe bothers you?
I think people think we're trying to build mines and we're actually unlocking value. I think one of the big, and I did a Rick Rule little class about this the other week, which was fun in their boot camp series or in their kind of series. And what I think is we're answering the unanswered question. We're making these single steps, and those single steps can be done in the matter of months. Like right now, we're getting the drill results for the Cecilia project, and that's going to unlock the value or not. We're either going to hit something that the market is going to get excited about or not. But that single step would be a huge step for value and value creation. People think, how long is it going to become a mine? And that really is not the key question. We're not trying to figure out how long it takes to become a mine. We're trying to think about how are you going to make money? And the way you're going to make money is from something that's not appreciated to something that displays good value. And so I think that's one of the misconceptions people ask me all the time is, well, I'm not going to invest in exploration because it takes too long. And I respond to them and say, well, it actually doesn't take that long. It's a matter of months. And you have the drill results. Many times it fails, it doesn't hit. But I'm not trying to see how long it takes to build a mine. All I'm trying to do is see if I can find something that's going to be re-rated as a high value, and that itself gives the opportunity for a big win.
That was a wonderful question, and I think you're absolutely right there. I deal with that myself, even in the comments of these YouTube videos and whatnot. So let's flip that question around, though. I mean, you've been involved in the public space as a CEO for almost 2 decades now. I believe RiverSide's been around for 17-ish years. So I want to talk about how our industry communicates with investors, and what do you think then on the flip side? What do you think companies get wrong, or what are so we just talked about what investors get wrong or have a misconception on for the industry. What about companies? What kind of misconceptions do they have about investors in the space?
So I think this really good distinction that Rick Rule often uses between investors and speculators. And I think often the people may come into the sector, are they really investors or are they looking at it as a speculation? For us, we've tried to create a company that has a very stable business model. We're not trying to tie it to a single discovery or a single project. So therefore, investors, people that actually are going to put their money in and hold and see what's going to happen with it, as opposed to a speculator who comes in maybe with the financing, perhaps carrying the warrant, selling the shares as soon as they can to have the upside flip on the warrant, or simply in it and in and out, trying to look for companies that have a lot of liquidity so they can get in and out. And then they're looking to either speculate on a small amount or a big amount of upside, but then how they're doing their things. So I think one of the big misconceptions for people, are they actually a speculator or are they an investor? And I think that's a good one. I think a second thing that the people that come in, and let's call them speculators for now, think they're investors, but they're actually speculating in these sectors, looking for drill results, and they come in and out, and they don't really look at the fundamentals of a business. And I think that many of these companies that are in the sector are simply trying to provide good speculations with upside and being done that way. And so as long as people appreciate they're investing into a speculation with really good chance of doing something, or maybe has a good win, but has a high probability of not being successful, then they actually don't become so unhappy. Unfortunately, I think people come into the sector, maybe they're not confused themselves, or they come in and it takes a lot of energy to be a speculator. It does not take so much energy to be an investor. Investor, if you simply put in, and I find potentially if you put in only maybe 1/4 of your investment the first time, and then if it goes down lower, you put in more, you're an investor and you're trying to own a business and you realize it's going to be over time, and maybe looking to take some profits out of that as it goes along as an investor. My mother was telling me, she's 88, and I was just with her, and she was telling me how excited she was when she retired. She took $60,000 and put it into this investment, and then that gave her dividends through time, and it's now worth, from $60,000 now it's worth $130,000, and that's an investor. She just has taken money out over the last 20 years, and it continued to go. And that's what RiverSide has tried to do. We've tried to create opportunities for investors in the sector, and I think I really understood that as part of my research and understanding, having worked, is how do you make an investment for really making people, perhaps European investors, people that are going to hold the stock, no warrants and not a lot of financings, but instead try to take the money that you do have and convert it into value, and then put value on the balance sheet. That's what investment looks like. So people that invest in the sector, if they look at the balance sheet and they look at the assets and they look at the track record of the company and the financing record of the company, that's a way to make a distinction.
That is a wonderful point, because it seems to me that companies and investors, what companies oftentimes call investors but are actually speculators, they're often too far apart from each other. They don't really want the same thing. Investors want to flip the stock, make money in 3 months. The company maybe needs 3-5 years to make a discovery, and they need to finance multiple times throughout the process. But sometimes them knowing that their target audience might not want to get involved in something like that, they omit those details, sometimes maybe on purpose, where they don't want to let you know that, hey, it's going to take 5 years. We're going to have to raise capital at least 3 times in those 5 years. And you just make the wrong matches all the time. And you kind of ruin companies in the meantime. Am I making any sense here?
Sure. No, I think so. I think it's really good. So it's wonderful. So we have a dedicated investor relations person working with us, or in the office with me, and we try to look and know who our investors are and communicate with with people following us. I've done the YouTube series and done many different series of trying to explain just what we're doing as a business and what the business looks like. Because if people are informed, then they can choose if they wish to own a business, and that's what really coming from Warren Buffett. You're buying a piece of a business. Imagine you can only buy 10 businesses in your career. I wanted to make sure RiverSide's one of those businesses that people could own in their portfolio, as I have. Never sold a share in 17 years. And I'm excited to have been able to help create now 7 companies out of RiverSide. That's been very good for shareholders that have participated in those, or owning RiverSide and then owning those other businesses that have come out. And some of those have become speculations. So we got the upside from that, and didn't have the downside of the loss necessarily, because it is a risky transaction. It's a low probability on drilling of certain things that it's going to actually make a big discovery. And so if you have the upside by getting it at a very low cost basis, that's wonderful.
Raising capital is the other thing that you're now reminding me of that you obviously have more experience in than most out there. But have you had a failed attempt at it though, where you set out to raise a certain amount of money but couldn't get it, or couldn't get as much as you wanted, or other challenges that happened in raising capital? Because I think that's another misconception, that maybe investors don't understand how hard it is to raise capital.
Yeah, I think it's timing, and it's really difficult and interesting because at certain moments in time, capital is available, and then most of the time it's not. Maybe 80% of the time it's difficult and not, and maybe 20% of the time it's available, or maybe less. There are little moments of time, and it's interesting because some of the things as corporations do act and take the capital when it's available, and if they do, the investors see that it may not be the right ideal timing for the corporation. So, yeah, I found it challenging. Not with RiverSide. RiverSide has always had capital. We've been lucky. We were most lucky in the 2008 financial crisis that we had done a financing, and Lucas Lundin, Rick Rule, Eric Sprott, and others had all financed us at a very nice valuation when we came out of the gate, and we're doing very well. And that I had appreciated capital right from the beginning. I really think Almaden's chairman, Dwayne Poliquin, and other people who kind of taught me, your only friend's your bank account, to make sure you take care of it. And immediately, when we listed, we began to prune expenses. Even when it was a high time, we really started to restructure all the different contracts and everything, and have always really valued the capital we have in the bank, and having over $5 million in the bank right now, and having not had to do a financing in almost 5 years. Really, since 2019 was the last time we did a true financing into the company, and things like that was always very important. I think that's different than the sector in general. I think the sector is very capital intensive, and the job is to raise money and deploy money. And I actually have tried to teach our job is to make money. So where our job is to make money as a business, to make money as a company, and to run the business called mineral exploration. But our job's not necessarily to spend money. Ours is to make money, and we have to spend some money in order to make more money. But we don't spend money just on our balance sheet to make discoveries. We try to have other people spend the money to make the discoveries, and we have an interest in those. We always have a royalty in those, but it just is too expensive to spend the money to try to make the discoveries. The numbers just don't work. And so with our balance sheet and what we have, we try to use that to own assets. I think that's very different than other people that looking at the business, maybe, who are in the analysts and the bankers and things that really see that they want to see the money, raised and spent. And that's good. It gets done and spent. But on the other hand, then you only have the upside. You have to at least recover the money you spent. Plus, if you can take money that you get and buy assets, then you have something that you can have on your balance sheet. And now asset would be something that's going to make you money. So it's going to make you money. So how is that property going to make you money? Really comes to structuring the deal right from the beginning. So one of the key aspects I look at when looking at a project is, how much is it going to cost for me to get it? How much is it going to cost for me to keep it? How much is it going to cost for me to invest in order to get someone else to take it, move it ahead without me having to spend the money? Those are three very fundamental questions about a project that I look at.
What defines a good versus a bad financing, though, John Mark? I know you watch the space very closely, so you're seeing deals come through every week for sure. Maybe not every day. Well, I think every day is fair too. But what defines like when you see a financing and you think like, oh, that was a very bad financing? What's a bad financing?
I guess who comes into the financing? I think the length of time and the terms on the financing, and then also is the pricing on the financing and the overall. So I think one of the things that I find is bad for me is warrants. I think I actually turn around the other way. I think it's really nice to see financings that do not have any warrants, and we work very hard to do that. So I'm the chairman of Capitan Silver. It's one of the companies that most recently came out of RiverSide, and we dividended the shares on a 4-to-1 basis to the shareholders of RiverSide, and we financed that ongoingly since the beginning with no warrants. With no warrants, I think it really gets people that buy the stock that want to be co-owners of the business, and so that kind of helps to get investors as opposed to speculators. And I think a bad financing is a financing that's easily liquid, so there's no hold period, and so people can rapidly sell. I think a bad financing particularly is one that has no hold period. These live financings for me are not necessarily so great because it doesn't give the chance for the corporation to move ahead, and there are all these fees associated with it. If nothing else, if there's not even a warrant, just the fees themselves, then it provides capital, but on the other hand, that capital can basically be put back into the market. The shares could be easily sold back into the market. If you have a true investor, then hopefully they shouldn't matter if it's going to hold it for 4 months, as kind of you're supposed to do with an exchange thing, or 4 years. And clearly, if you're going to stay for 4 years, that's great. I'm not asking for someone to stay for 40 years, but if you can stay, if you're going to stay for several years, then you should be in the stock and own the stock. And it's a little different, but if you don't give an investment enough time to grow and make a difference, if you really expect it just to jump up quickly, you're a speculator, not really an investor.
I'm very happy that you brought up the point of warrants, because I do not like warrants. I talked to Luke about this last week in the episode, but I think warrants are perpetually hurting the space, and oftentimes, not oftentimes, almost always hurt investors, and therefore hurt the image that the space has, and so on and so forth. But I want to talk to you about defining success, because you're reminding me of you've spun out Capitan Silver. You've done it before. You've spun out other companies. Because why I want to talk to you about this is because since you listed the company in 2007, so right before the GFC, which I believe you did at 75 cents per share, your stock, what was it?
We did it 50 cents a share,
Okay.
which was the listing price, which was great. You've done super good research on everything. And then it traded on the first day up to 90 cents. And by the third day, it was up over $1. So it was a great time in this autumn of 2007 when we came out. It was a real high-flying time, and we did lots of work then, but it was good. Yeah.
Well, where I want to go with this is that so you listed 50 cents, and then you go through a lot of volatility. At one point, it was as you said, over $1. You're currently trading at around 15 cents. And last time we spoke, you said RiverSide has had multiple successes over its existence. But again, a retail investor might look at the price chart and disagree with you. So how do you define success in RiverSide's case?
So I think let's just, I guess, there's success as a corporation, and there's success for the person that's owning the stocks. There's two different questions there, are kind of implied. So for the corporation, one is existing. Second is having a balance sheet. Third is having a diversified business. I think success is that we've had discoveries and been part of discoveries and not blown up. We've never had a major lawsuit, and we've never really not paid a bill. We've paid all of our bills. Those are successes as a corporation. We have, really, if you can do that now for an investor, the stock goes up and down. And so if an investor is able to pick up the stock and hold the stock, when the stock is doubled or tripled, can sell some of his position or her position, then that can be a win. And so we've done that 4 different times. We've had runs of over 4 or 5x upward. Also, we see that on an annual basis, we generally have the share doubling upward and downward. So if you do purchase your stock, and if the stock goes down more, pick up a little bit more, so you lower your cost basis. And then if the stock is actually doubled upward from wherever you purchased it, if you took off half, you get a free ride for the rest of the time on the company. And so you could do that almost on an annual basis. It goes up and down, the volatility. Recently, there's not been so much volatility. It's been more flat is kind of just during the time. And it's really, I think people have moved on to other things, and they really like speculation in the sector and aren't really looking at being investors and owners in businesses. And the investors are buying other things like ETFs or other vehicles and beyond that. So I think investors have been a success. RiverSide has been a success in that we haven't blown up, that we've been able to do that for the investors. We've not had to finance them and gone down to any rollbacks or share consolidations has happened. And I think if you look at a 20-year chart of many of the companies, it goes very, very high and comes down. So if you look at our chart, it went up to $1 and it's now at 15 cents. But we've also spun out to shareholders Capitan shares, which went up 3x from when we gave it to them. And so if you put the cumulative of the shares from the spin out plus the value of RiverSide, then the implied stock is well over 35 cents instead of at 15 cents. And so that's a nice win for people. Then you realize that, if you were just, so you have to put together the spinouts that we've given to shareholders. Now, if you look at the value of the spinouts of the companies that we've had go out of RiverSide as well, for the RiverSide overall, we've had other things like Arizona Metals that went to $5, Silver Viper that went from 15 cents to over 50 cents. We've had many different nice wins. Copper Bank, now called Verde Copper, is another where we were a large shareholder of that company when it formed, and then kind of farmed out the assets, and we're able to have the shares in that. And so we've had good share positions in many different companies as well. And so if you looked at that, but as a shareholder, there'd be several ways in terms of the upside of the short term and then on the medium term. And now I think, we're getting set to have another potential fundamental transaction for the RiverSide shareholders, which will be wonderful as well once we can get all that put together.
You bring up an important difference here between operational success and share price success, because those two are not always correlated. Matter of fact, most of the time they aren't. Small cap mineral exploration companies typically overshoot to the upside and they overshoot to the downside, in my experience at least. But if we zoom in on the operational success, though, what do you think is the main differentiator? I mean, what separates teams who have had continued operational success decade after decade, albeit at high levels like the Lundins who you mentioned, or lower levels like some of the transacting a project for lower amounts of money, but still making money on it. What do some of the teams that succeed have that the teams who fail don't?
Well, I think one of the things is focus. And, we just finished the World Series and the Dodgers just beat the New York Yankees and won the World Series. When they did that, they were a team and they focused on getting really good players, super good players with getting them to work together. And so I think one of the key things is collaboration. And so, people that work in RiverSide definitely feel it's fairly intense. We're very focused. Myself, I'm not a director or officer of other companies, not spread about. I've really focused just on the one company, and most of the people working in RiverSide similarly are doing that. So I think focus and dedication. And if you work on whatever goal you do, myself, I used to run marathons and enjoyed running the Boston Marathon, the New York Marathon, enjoyed running 100-mile marathons, and, would run every day and focused on it. And so if you focus on what you're going to do and really work on it day in, day out, you'll do well. But I think a lot of times people get off track. And so we try to make sure that we're focused on making money, on making sure that we're running a business. And we talk about inside the corporation, the goal. Eli Goldroth's book, The Goal, and use that a lot of really making sure everyone's aligned on what the goal is, which is to make money as a business. It's not simply to spend money. And we don't talk about a budget of how much money I have to spend. It's more of how much money do I have in order to get money and have money come in. And we just paid a bonus just this week to someone that, in the company who brought in more money for the company. He gets a bonus for bringing in money into the company that wasn't dilutive to us. That was, more money coming in terms of investment into our projects. And so we pay bonuses to our staff for that rather than for having completed a financing and paying a finder's fee. Instead, I'd rather pay our team. If we can get more income into the company, that's great.
The team is what I want to zoom in here even more, because it is essentially your job to pick good teams on a continued basis, right? So what do you look for in a team member? Like, is there one thing that you could spot kind of with your naked eye, or all these years of experience that you have?
Trust
like
is
one
really important. And, if you can really trust people and trust people to do what they need to do and make sure, and it's trust is something that's earned. And so competence, really skilled in that sector. And also honesty, people that are really going to be honest with the data, make sure they're honest with us, because if it's not working, that's okay. It's just as long as we know. It's really difficult when people are not trustworthy and they can't really tell you the truth, you're not really sure about the data, then it gets very difficult. Or if they're hiding things, that just doesn't work. So, competence is really good, technical competence. So I don't look for degrees. I don't look for people that have studied in school. I look for people that have been out in the field. I like people that grew up outside of cities and out on the rocks, and people that are able to get out in the field. So real focus is for us is being in the field and really, kind of that. I think also people that don't keep asking about compensation, but instead ask about impact and what they can do and make a difference. People, we don't talk about a lot of different types of compensation. That'll all take care of itself if we're actually successful for shareholders. So those are some things that I really focus on.
And it's also a combination, right? The success of it is something I've been thinking about is combining the right teams with the right assets. Because I'm sure that there's a bunch of companies on the venture that just across the exchanges that trade at $500,000 to $2 million valuation, what I would virtually call no market cap, because it's almost impossible to finance any real work based on that market cap. And those projects are typically worth sometimes, not typically, sometimes those projects are worth more than 500,000 or 2 million market cap. But because they're being mismanaged, that's what the market values the combination of those people with those assets. And so I want to talk about how you pick the right assets to combine with the right team, because it's also your job to pick projects on a continued basis, not only people. Whereas a typical explorer might only have to pick a project once or twice and then explore it for 5 or sometimes 10 years or whatever. So what's the process look like for you? I mean, we touched upon it a little bit, but what criteria do you use to pick projects that are good enough for RiverSide?
Well, you're talking about these kind of zombie or poor companies, so cost. So how much you're going to need to spend to answer the unanswered question is really important. Jurisdiction, really important. Where is it both in the country level, maybe even at a continent level, and then in a state level, and then as a more kind of social level, a community level, and then also as an environmental sub. Location is really important. Third is deposit type. There are certain deposit types that go deep and narrow and take a lot of money to test. Other ones that are shallow and spread out and very easy to test and therefore can really make a difference. That's something David Lowell did amazingly well. David Lowell really did a good job of focusing on shallow open pit targets often initially and then chasing them deeper. But by doing that, rapidly could turn out to see how it would be. So cost to operate the project and the number of months that it's operational are key aspects to me as well. So if you can only work a few months of the year, if it's remote, if you have to use a helicopter, I don't think you'll see that we're there in those type of projects. So we did use a helicopter once for 4 hours and that was good. And we moved everything up the mountain and then the mule team took the stuff for the next month down from the mountain and we did it with mules and built a small corral and did that. But we did use a helicopter one time.
4 hours for 17 years of operations?
That was good. Yeah. And we had a partner fund it.
Is there that's an even better part that we could also get to, and jurisdiction is definitely something I want to get in, but is there a good feeling element to it though, or do you rely entirely on hard data?
No, I think I try to use the idea of where a project should be or where a mine should be. And myself personally, I'm very focused on Spanish-speaking Latin America and the Americas, although Canada and the United States are very good for us. So we focus on that. And I think trying to find places that, really make sense and can be developed and that really make sense, not to places that are environmentally or just too beautiful or too special that really shouldn't be pursued. Just don't need it there and shy away from those places.
So you speak Spanish then?
Por supuesto, hacemos todo en español, todo está bien.
That's great. That's something that Rick Rogan always refers to, having specific experience for the task at hand, and Spanish is part of it. I mean, I say it jokingly, but it shouldn't be jokingly. It should be a real thing. Like you should be able to speak Spanish if you want to focus on that. What would you do differently though in your selection process if you were not a public company but a retail investor yourself?
So I am a retail investor myself, and so I invest into the sector of prospect generator corporations quite a bit. I definitely would continue to try to focus in on those high quality companies that have been in existence and been able to operate, haven't, not the newer companies that don't have a proven track record. I think having that proven track record has worked out for me well as a speculator. In that, as a speculator, I can get into those companies in and out and that have been there before because they're not going to do so many crazy things as the new starting companies that come out. I've really done poorly on those because they come out and then they blow up very, very fast, and that hasn't been good. As an investor, I've done very well in buying into businesses, particularly companies like RiverSide that have royalties and royalty portfolios. And if they're so undervalued and yet they still have capital, then they're going to. I feel that they can then do very well as an investment because the enterprise value is actually very low. If you have a nice cash position and a low market cap, the valuations be given to the enterprise. And then if that enterprise actually has royalties and you look at the value of that royalty portfolio, you have a good intrinsic value to the company as opposed to a company that simply has a project with a vision of what it wants to do and then it's going to spend money to unlock that vision. That's great, but there isn't necessarily an intrinsic underlying value to the company other than that they're going to spend the money. But if you have royalties and those royalties are moving along the path, the royalties can be transacted at any time. If you have multiple jurisdictions that are bringing you income and how much income are you making, those are things that I found have helped me as an investor in the sector.
I also know you did a field mini series, if you will, over 15 years ago now, and it's still on YouTube, by the way, where you basically went around BC, I believe, to hit rocks with a hammer. But when you're doing that, or just when you're evaluating a project on paper, but from the geology perspective, are there any immediate red flags that you can spot without having to look at assays or core or anything like that?
Underlying deal, who owns the project is a big one. And so really understanding, does this group even own the project or is it actually doing the work on something? So underlying deal. I think a second one is size, looking at the scale of the project because people can be working on something that just doesn't have scale to be significant. And so it really is difficult in scale of the tenure and scale of the actual targets. And third thing I think that's important is the deposit type. If they're really looking for these like very large deposit types in a small company, then how are they actually going to transact that or test that? So the cost to test the target, so amount of money they're going to need to spend to get each intercept is really important.
Unfortunately, sometimes I even find that companies might misuse that, as in they might be smaller companies who decide to go for a bigger asset because they know it's going to take more money and they can go back to investors and say, oh, we need more money, we need more money, we need more money, while, kind of blaming it on the type of deposit, while maybe it's operational failure that we're dealing with here, which also happens. Part of it is jurisdiction too, though, I suppose, and you touched upon it. I want to go a little bit more in depth on that. And over your career, you've worked across different jurisdictions, but mostly North America, and so specifically Mexico, the US, and Canada. What's been your favorite jurisdiction to operate in over those years? You mentioned Spanish-speaking Americas, but is there one specific spot that you really like?
Well, they're different things for different things. I mean, it's great to work in Australia. Australia is a giant country, vast, really fun to work in. Man, going to breakfast in Turkey is great. I love working in Turkey. It's a wonderful place, super people, really neat, and the most interesting breakfasts and food. Going for dinner in the Philippines is fun. You get this great dinners in the Philippines and stuff like that. Great geology there, but difficult to work in. It was great to work out in the Mongolian steppes and to be involved in the discovery now called Oyu Tolgoi, and tough environment out there, but just so wonderful to be out there on the frontier and being out there. I was out in Kazakhstan. I'm a shareholder in Eris Minerals and was out on the steppes of the Kazakhstan with the group there and just seeing just the vast potential of deposits and things. But I really like Mexico. in that you can build mines, and that mines could be rapidly put into production in the past. And that had happened. And I was able to be in Mexico in 1987, so a long, long time ago, and worked there. And then the mining law changed. And as the mining laws changed, investment came in. And there were tens of deposits that were found and brought into production faster than almost anywhere else in the world. It was really great to see. And people are able to build mines and really move ahead. And that was great. That's now kind of wrapped up, and Mexico has changed over the last decade and not been able to kind of put forth the policies of deployment of capital. And so that's been disappointing. And so we've had to move on from that. But yeah, I've had a lot of fun working in different places. I lived in Chile, and going back there for Christmas again this year with my daughter who was born there, and my son, and that'll be fun. And my wife, and she speaks, Spanish as well. And we've all grown up speaking Spanish and working in Latin America, and that's great. But you can't beat Lima, Peru for food. And as my son went there to Lima, and then he came back as a foodie, and it was great. And man, the geology of Peru was wonderful, talking about David Lowell and the great discoveries of Peru. Really, really great. But again, the government and policies there. So I find that, there are moments in time that are really great in countries, and to be there at the right time in the right place is vital. And then the country will, politics will change, and then they become less favorable, but the geology doesn't. And so I've had the chance to work in 33 countries kind of over the career, and worked in those different countries and found, really good locations in those countries, and then trying to think about the time when one could develop them. But yeah, it's really about the timing of being able to unlock the value.
What was your involvement with Oyu Tolgoi?
I was lucky to be in the company Magma Copper Company that had done a joint venture with the company Erdenet. Magma Copper Company was then bought by BHP, and BHP then eventually had the financial crisis with the BRIEX and then other challenges in 98 and 99, and then sold the project to Robert Friedland as an option and then a purchase and had the royalty. My involvement was being part of the team. I was not the leader. Sergei Dyakov and Garmajov and Munkbot and the guys there were operating on the ground. I had a chance to be involved with the team around it, working with the program, looking at the initial resource estimate, being following the time when it was sold, and then also asked to sell. I had to do the valuation on the sale of the royalty, which I didn't want to do, and founded RiverSide after I had to do that, because I realized that we were, that having a 2% NSR with it uncapped and no other conditions with Robert Friedland as your jockey running it, if you just held that royalty, you would do just fine. And so I realized if I could make a company that would own royalties like that, we would do just fine. And so I had to do that. And then a few months later, I resigned and moved on and founded RiverSide, where we would have royalties like the one on Oyu Tolgoi, where we would have big royalties on big projects. And I knew that over time we would do well. I was also involved in the Resolution discovery. Again, it was called the Magma Porphyry at the time, and Magma Copper and BHP. And then we sold down the interest in that, we being BHP. And I was, again, part of the team. I was not the Alex Paul. I was not Scott Mansky. I was not the guys drilling the holes, but I was good to be in the room around the project and with the team and following the discovery from the first holes of alteration, and then the initial discovery, eventually the floating Air Jordan Nike vision of the holes that were going through, that we could see the visualization of the first body, and then the first resource estimate, and kind of seeing how that project evolved. And it was great to be in the group and be around that project and really have the experience of what discovery looks like, and can see that it can happen quite a bit. There's a lot of good potential if you have access to capital and upper management that's supportive of good quality geology.
So it's essentially Oyu Tolgoi that kind of birthed the idea of RiverSide. That's kind of an interesting take there. What do you go ahead?
It was the catalyst, but RiverSide had actually kind of, as the prospect generator business, had really been seen from Almaden and companies as early as the early 90s, and 92, 91, Imdex Cascabel, the formation of that, 89 and 90. So that's when the RiverSide business was kind of started and found in databases, and database compilations were kind of 87 through 95. So that was really where RiverSide, but the Oyu sale and the Oyu steps in 2003 and then 2005. And those were really times that were then kind of just made it clear that it was time to move on and go do it oneself. So yeah, it was 10 years later than the real formation of the concept. I think that's something that people bring a business public, don't just simply start a company. I think that really is important to figure out your plan, and it's really good to plan over a career of what you're going to do and how you're going to do it, and not simply just try to start a company quickly with a chance because you can get some money and go spend it.
I want to go back to North America and talk about something along those lines, because North America is becoming more and more challenging for startups, essentially in the mineral exploration industry to operate in. What do you think the biggest challenge is for our industry in North America
Marketing
right
is
now?
really a big challenge now, and I think expectations of community. I'm quite disappointed by the fact that there's such an expectation that these startup companies can therefore pay all these different fees and everything like that. Whereas in general, other businesses kind of, they just aren't asked initially to be paying so much to the community in order to operate or work in the community. And that's stifling and going to really kill the ability for exploration. And, it's great to have ESG, and we all want to help in communities, but these corporations are glad to provide work and try to do that, but they can't be replacing the government of what the government maybe needs to do in compensating communities. And our exploration is a very light footprint. We're not doing very much on the ground, much less than most of the other type of, just look at doing a construction of a housing development or something as a bigger footprint or something if you're building a road then. And so it's really I think that's really challenging to the industry and to the future of mineral exploration in North America.
How would you solve it though? It is challenging. That's what I keep hearing from people. But how do you it's got to be solved at a very high level. So how do you solve it?
So I think one is by realizing what you're going to commit to do as a corporation and really hold that line and not overpromise. It's sad to go into the community and be told, well, the other guys offered this or that, and my answer to them is, well, you're not getting it from those other guys. They can't do it. But and so there's a lot of then said that, well, people lied or people didn't deliver or whatever, and it's too bad because there was never ability for them to really do it. It was unrealistic, and people raised money and did something as a speculation. So how do you do it? Is you have to really work with community and try to explain and find communities that understand or can accept that they're not trying to mine or own or milk the company too much at the beginning, and allowing the company at least to get going and started. I think the other thing is that permitting is that governments realizing we do need to let companies go. Our goal is not to actually stop, or our goal is not necessarily to be such a policeman against companies. Companies are not trying to hurt or do things bad. And it's just amazing the people that are working in the government feel often that their job is to disallow and to block rather than to facilitate.
That last part is just so true, and government is ever expanding, and I might lead us down a different conversation there. But what I think that actually might be one of the most important things on the corporate level, the way the company deals with the community around it, be it First Nations or whoever else, and its permitting regime. Who do they have to permit with? How quickly could it happen? I mean, I asked a similar question about the rocks earlier, but now looking at it more from the corporate perspective, is that it, or what was the thing that what's the thing that I should always be on the lookout for, or the first thing that you think can make or break a mineral exploration company?
Yeah, well, I often ask, do the people have a permit, and what are the underlying agreements they have for the ability to do the work that they're planning to do? And, And if they don't, then, how long is it going to take? And if they do, how long is that permit, or how stable is that permit on a go-forward basis? And I think that people are raising money. I think we're going to find that increasingly a challenge around in Canada, flow-through financing, that people are raising flow-through financing. But how much of that flow-through financing is really going to be able to go on the ground, and what are the conditions that in order to do it, you have to pay First Nations or pay other groups is a big challenge. And we're being asked, how much are we going to pay? And it's kind of a interesting tax. That's kind of some unofficial payment that you need to be making, and the government is not standardized. And so I think, yeah, as an investor, to look at how is this corporation going to ongoingly operate in this location if there's such a tax, if there's such a fee, if there's such a cost to me as an investor to fund this group to do this work, because it's at the end of the day, it's the investor's capital that's going to pay these different intermediary groups or First Nations and different things and fees, environmental permitting consultants, in order to actually do the exploration work, which was not true in the past. In the past, raise money and spend it in exploration, you get your permits, but it wouldn't have so many costs to get the permits. And now all those costs to go to get the permits are becoming quite a big drain on exploration. And so, yeah, the amount of exploration that's actually being done for the dollars raised will continue to decrease, such that people move on from North America and exploration decreases in North America. And it becomes much more around existing locations that maybe could have an ongoing permit, but not developing new grassroots, new locations to make discoveries.
That's cost and timing are the two main things, but at the same time, there comes extra effort in there as well, and additional expertise in dealing with these issues is also something that comes on top that is not often discussed, but I think you yourself are dealing with. What's on that topic? What's a day in the life look like for you? Because you said it's kind of intense in the company. It's a lot of work. What do you do? You wake up. What do you do?
Check emails and check the communication, and always make sure safety first, make sure everyone's okay, make sure we're on track on what we're doing. And we have different divisions of the corporation: the investor relations division, the finance division, the technical division, and the shareholders. So looking at those 4 different components and making sure that things are going well, looking at the technical results of our existing projects and looking at the technicalness of other projects that we may acquire or working on legal transactions and deals, trying to figure out how are we going to get these done. We're almost always doing acquisitions and always doing sales. And so working on that. And my job is to make sure that we get a lot of good sales on our properties. And so focusing about 70% of our effort on farming out of projects and only 30% on farming in. It's much easier to do farm in and look at things, but it's much less value to the shareholders. If we can sell our projects well, that's where we make money for shareholders. So really focusing on that. I think that's something that maybe is underappreciated, is really working on the sale of the projects is the goal of making money and doing that for shareholders. And so my day is spent that way. And meeting with investors and doing wonderful videos like this and interacting with people that own the company and people that wish to own the company. Those are all key aspects of running the business, and meeting with our major parties. Right now, we're drilling with Fortuna Mining. Previously, we were exploring with BHP. Prior to that, with Antofagasta, and we've worked with many of the major companies. And so, preparing and meeting and communicating with the major party partners that are funding us to do the work, and we're providing the organic growth for them. It's a real win-win. We can operate more efficiently, be more in the field, can do things quickly, whereas those big companies, as I found when at Oyu Tolgoi, for example, it was a great discovery, a neat project, but it was just too difficult for BHP at the time to see how they could operate in Mongolia, whereas Robert Friedland could come and make a big difference and really get things, capital there, and get things moving in a good way. And so if we can be more in that realm where we can move forward on projects that the majors just can't do, that's a real good symbiotic relationship that RiverSide strives to manage and do.
Having mentioned the technical side of things, that you review these things reminds me of looking into the future maybe, but it reminds me of technology and the way we use technology. Do you think that day in the life will change or evolve as technology evolves? I mean, we're broadly talking about using AI in exploration now. Is that something you see value in, and how do you see it changing the industry?
Yeah, we do. So as the corporation, we're using a lot of technology and databases, and next week I'll have a review with our different GIS teams and things about some of the databases. And so we've been doing that for a long time. I started building the databases back in the mid 80s and early 90s, and found that it's very good. I think that AI was using, ChatGPT and some of the other different learning models and artificial intelligence things yesterday, and I'll be doing that again today, and that's good. But my job is not to be the computer person. That's part of the team and the corporation, but we're big enough that we have different people that run different skills and have different aspects to it. And so I check in with our computer technology aspect of the corporation daily and interact with them, and we'll have meetings with them, but I don't spend the time myself doing that. I could do that and would like doing that, but that's a different role. And for myself to be the lead coach and kind of making sure that we're working on all different fronts. And at the end, looking at assays and assay results and figuring out the interpretation of that data to figure out where is the next discovery is really hunting. And so my main job is to lead the hunt and to make sure that we're successful in the hunt. And if we can hunt the good thing, and then we'd have the skinners and the people that are going to take what we have hunted and put it into value and work it up, and can use AI to then analyze. But really, where are we working and what are we working on? Those are the key things that I have to focus in on. And then we can get the AI to then go through the data that we get and try to figure out maybe new interpretations of data. So yeah, technology is huge. Innovation is really important. And we've always tried to be rapid adopters, and I've tried to bring people into the team that are willing to adopt and work with the newer technologies and to try to forward those along. Yes.
I like the hunting analogy. I might start using. I just like analogies. I'm gonna have to think about this for a while longer, but I think it's a good analogy. And what else I like is that while you recognize the power of AI and you use it yourself, you're not looking at it as a magic bullet solution, because it really isn't. That's kind of important for me as well when I'm looking into companies, is that they do know how to use technology, but don't rely solely on it. And we're kind of coming up on our time here, John Mark. I don't want to keep you here all day, so I'm about to start working toward wrapping it up. But now, before we've talked about what it feels like to be between a rock and a hard place, figuratively, I hope. But tell me about your biggest failures, mistakes, embarrassing moments. We all have had them. But what's something from your career that still kind of bothers you when you think about it?
Well, I think, maybe I could have left earlier to go and found, entrepreneurially. Maybe I was in school too long to be so educated. Not a failure, was wonderful to do, and that was good, but good. And I think, I think, we stayed too long in Mexico and focused there. It was just unlucky. The country was a great place to go, and then really slipped a lot since 2012. And that was really, just too bad we didn't make the move more rapidly to move into Canada. Now we've gotten to Canada, and in 5 years have drilled, done exploration, and done that, and now we're kind of have been able to launch and do that. So I think moving quickly has been a failure, not moving fast enough to take on other things and being too long in places. On the other hand, having that perseverance has allowed us to make discoveries and find things and be there. And I think also having competence. We are, very skilled in the places that we work. It's great to work in Nevada. I've been working back and forth in Nevada for a long time and looking forward to being there over the next 5 years. And so that's good. So I think we've done well at doing that. But it's important for the company to move. And, keeping people. It's been hard to keep people because we haven't paid the highest rates. And it's been hard to keep people because we go ebb and flow, and it's only certain people that understand it's a business and we want to run the business. But we've been very successful in having great people that we've been able to work with. And that's been good, but it's been sad not to be able to keep the great people that we've had. They're just as turnover, and they move on, and that's just part of it. But I'm really delighted the successes they've gone on to do on their own has been wonderful, and we're always good friends. So that's really great.
One of these days, we should sit down and talk about the different jurisdictions that you operate in, and maybe more in depth, because I think you have more insights on more jurisdictions than again most people I talk to. So this has been great. I really am looking forward to getting a RiverSide update, see what you're doing with the spin out and a bunch of other things. And also for people listening and watching, you can always send your questions in to me, put them in the comments, put them wherever. I'm probably going to find them. So thank you, John Mark, for investing your time in me. This has been a great conversation, and I look forward to the next one.
Thank you very much. Hope you have a good day, Antonio. Thank you for taking the time, and all the best to all your followers.